Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's the monthly expiry day, so there has to be a lot of volatility. After falling around 120 points from the day's high, we've recovered around 120 points from the day's low as well. So yes, it continues to be very volatile. 23 points lower on the Nifty as we speak. Bank Nifty has recovered and that is leading to the recovery as well. MCX, of course, on our radar. Trading has finally resumed at MCX. It's been about 4 hours, 15 minutes almost since it was halted. So there's some update coming in from MCX as well.
Good afternoon. Given the kind of volatility that commodity prices are seeing, it's very clear that there were a lot of traders who had their eyes on when MCX will open. Finally has resumed. It's been the longest halt that this particular exchange has seen, and of course, there will be questions raised as to what exactly has transpired. But we have a lot lined up on the equity markets as well. So let's start off with the top headlines. Stocks recover some ground after a midday dip ahead of today's F&O expiry. Realty and IT are the big drags, while metals and PSU banks gain. Mid-caps in line.
Car trade tech surges after reporting strong Q2 numbers. Margin expands, revenue of over 25%, while EBITDA nearly doubles as compared to last year.
Keynes Technology and Syrma LGS surge in trade after MEITY approves first batch of 7 projects with an investment worth 5,500 crore rupees. Keynes tells CNBC-TV18 that they will meet the timeline set in the electronics scheme, while Syrma says India will become a hub of component manufacturing in the coming years.
Jana SFB is under pressure after RBI returns the company's application for voluntary transition to Universal Bank. Application returned due to non-fulfillment of the central bank's criteria.
Trading at MCX resumes after halting for more than 4 hours amid a technical glitch. This was the second halt in trading on the commodity exchange this year. All right, those are the top headlines. Market is seeing some further recoveries. Just a 17-point cut on the Nifty as we speak. Banks are surging. And we do have the PSU banking index, which is leading to major moves on the Nifty as well. Metal index is also higher by 1.3%. And these are some of the reasons why we are seeing that recovery. Just quickly, let's take a look at SRF because it put out its presentation where it spoke about its commentary as well. And they do indicate that, yes, demand was impacted in some of the segments. Agro majors are deferring procurement to late second half of FY26. But they say raw material prices, they seem to have bottomed out. This is for the specialty chemicals business. And they also say that in the fluorochemicals business, their domestic gas demand is expected to recover in the second half. For their technical textiles business, they are talking about market conditions expecting to improve from the second half. The stock did recover, but quite flat right now with some positive bias. That's right. Important comments there. A couple of conference calls that we'll be tracking. I'm sure you'll be looking at SRF. Even Industars today has its conference call. All eyes will be on commentary regarding yesterday's Vodafone Idea judgment as well. But this is our special segment, Mid-Cap Movers. Solution is standing by the wall to take us to the mid-caps that are moving around in the session.
So amid the volatility on expiry day, we are seeing a big move on both these sides in some of the major names in the broader market. So on the top of the list is Supreme Industries. After that, there is a concern related to margin improvement if company will see, and also company has lowered its revenue growth guidance for FY20, volume growth guidance for FY26 to 12 to 14% from earlier guidance of 14 to 15%. That's the reason stock is under pressure. Indus Towers is sharply higher after company has reported an all-round beat in Q2. Similar trend can be seen for Car Trade Technologies as well as JK Tyre. Both these stocks are higher after strong Q2, while Syrma SGS is higher after announcements related to PLI by government. Some of the major mid-cap gainers, first one is GM Breweries. Over the last few days, you have been seeing that one day stock is up, another day stock is down, but today it's up another 8% with healthy volumes. IDBI Bank, there are certain reports about the stake sale and it's on the track, and that's the reason stock is higher, currently up more than 8%. Chennai Petro is also seeing a big move with healthy volumes, currently up more than 7%. JSPL, ahead of its Q2 earnings, the stock is seeing big buying, currently up almost 4%. PSU banks, all the PSU banks have been seeing buying, and one of the strongest amongst all the banks is Indian Bank. Today also it's up more than 3%. Some of the mid-cap losers, first one on the list is Vodafone Idea. It's seeing profit booking after a big move that stock has seen over the last few weeks. Second name is HOAC. Basically, there are certain reports related to the agreement with HPCL, and that's the reason stock is under pressure. It's down almost 6%. PSP Projects, yesterday it was up almost 17%. Today it's seeing profit booking down almost 6%. DB Nifty Corp, after a big move that stock has seen yesterday after the reports led to government is planning to increase the ad rate after 5 years. Today it's down almost 4%. And last one, majority of the capital market names are under pressure, and BSE, you can see it's down more than 3%.
Okay, some interesting names there. Thank you so much, Sudarshan, for joining us as always and taking us through those names. It's a good time now to get a technical check on the markets. Let's welcome Shrikant Chauhan for just that. He's joining in from Kotak Securities. Shrikant, good afternoon. Thank you so much for joining in. Expiry day, what are you suggesting? What kind of moves will the Nifty see? What are the important levels to watch out for?
Good afternoon, Sonal, and good afternoon, Vivek. I think since last 2 days, we are seeing market is consolidating. It is finding difficulties to sustain above the levels of 26,000, but at the same time, it has excellent support close to 25,800 levels. So I am of the view that till the market is not breaking the level of 25,800, we could see market to remain in a range. But about 26,100, we are expecting breakout sort of formation in the market. Broadly, I am of the view that the major trend of the market is up. And in case if there is any correction, then it will be an opportunity to look for adding some long positions. On the higher side, I am expecting market to move towards the levels of 26,500.
Okay, Shrikant, and what are your individual trading picks for the day?
So yeah, there are a number of stocks which are doing really well. And in that specifically, we like HDFC AMC, which is currently trading around 5640, 5650. There we have target of 5850 based on its technical formation. But in case if we see the longer term chart of the stock, then based on that, we can see the levels of maybe 6,000 in the near future. So at current levels, HDFC AMC looks quite strong bet to buy for. We can keep a stop loss at 5550 for taking any trading long positions. The other stock on which we are bullish is Thyrocare. Currently, it is around 1320, 1325. There also, we are seeing rounding bottom sort of formation. And the stock is on the verge of crossing its previous high of 1450, 1475. So at current levels, Thyrocare also looks strong candidate to buy for with a stop loss close to 1280.
Okay, all right. Thank you so much for joining us with all those details, Shrikant. So that's a technical check, but this is our special segment now, Mid-Cap Spotlight. Sudarshan is back with us. Sudarshan, how did the numbers of car trade tech look? The stock is surging.
It's another quarter, very strong set of earnings from car trade technologies. If you take a look at profit, it has increased to 60 crore from 28 crore that company reported in the same quarter last year. Revenue too has seen a healthy growth of 25%, and it's the highest ever revenue that company has reported in a quarter. EBITDA too has almost double, increased by 95% to almost 64 crore from the level of 33 crore in the same quarter last year. And margin too has seen an expansion of more than 1100 basis points, and it has come in at 33% against 21%. And this is led by all-round growth that company has seen in all the segments. Consumer group revenue is up 37%. Profit has seen an increase of 82%. Remarketing business revenue is up 23%. Profit has increased 30% here as well. For OLX India, revenue has increased by 17%, and profit is up more than 213% year-on-year. And company is saying that growth has been driven by operating leverage and integration of synergy. So because of an all-round beat and very good set of earnings, you are seeing a big move in the stock, currently up almost 16%.
That's right, Sudarshan. A sharp up move after the Q2 results just came out. A strong set, like you just highlighted for us. Well, here's a quick note for our viewers. If you'd like access to expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there's more to celebrate. 10 lucky subscribers win 1 gram of gold every day. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. You're still tuned into Midcap Radar. Well, JLL in its recent report says that apartments valued at 1 crore and above recorded 4% growth in sales in the first 9 months in 2025. Samantak Das, who is the chief economist and head of research at JLL, is joining us now to understand the dynamics in the real estate market, the demand and the supply going forward as well. Mr. Das, good afternoon. Thank you so much for joining in. While premium housing has done well, if you look at the overall units in quarter 3 2025 versus quarter 3 2024, there has been a decline. What are the trends suggesting now? Where are we in the real estate cycle, and which are the segments which will drive growth from here on?
Hi, good afternoon, and thank you for having me on this show. Yes, overall there is a decline in terms of sales in the top 7 cities. However, what we have noticed is the premium housing, which we are defining as 1 crore and above, and this is keeping in mind the overall urban income, all India urban income. So this premium housing in the last 2-3 years, if you have noticed, that has become the new normal in the top 7 cities. So the ticket size or the house price or the apartment price is now 1 crore and above in most of the launches, if you see. And there are reasons why this has gone up, the apartments priced above 1 crore. Because if you see the share 3-4 years back, 5 years back, this 1 crore and above share was even 40%. Now it has gone up to 62%. So there is definitely a rise in the share of this segment. So some of the reasons I may just cite for understanding. One is definitely the land prices have shot up, exponentially, and more so in the top 7 cities and its peripheral locations. That's number one. Number two, very important to understand that buyers' choice for larger homes with holistic ecosystem and amenities, that choice has really moved. So we have seen the consumer preference going towards this type of housing. So that's number two. Number three, very important, is we have seen that the workforce in all these 7 cities, it's quite young, and whatever you call it, millennials or Gen Z, their preference is basically the tolerance of commuting is not more than 20 to 30 minutes. So they want to stay in the proper cities, and that's where the demand is coming as well. So all this together, with the cost of land, buyer's choice, and the commuting time tolerance, everything taken into account, this segment has really moved up. Now, going forward, our understanding is this structure of sales will remain. That means the premium segment, 1 crore and above, will have probably the lion's share, more than 50-60%. So that doesn't mean that in number actual quantum, it will the affordable segment or the mid segment, which we are calling it less than 1 crore, the share may go down slightly, but the quantum will remain, because the total sales what we predict will go up, given the conducive environment of house pricing. There will be a plateau that we are expecting. The interest rate is quite now affordable. It has really remained quite low for the last couple of quarters. And going forward also, we understand that prices, there will be some plateau, because it has already risen in the last 3 years. I think on an average.
Samantak, we are just getting to that. The other point that you mentioned is, while you're expecting prices to plateau over the near term, you've also spoken about construction costs. So going forward, do you see a plateauing even in terms of new projects coming up? You're saying construction costs have actually gone ahead and hampered launches.
See, land prices have really gone up exponentially. Cost of construction has gone up in the range of 5 to 8-10% maximum, right? But if you see land prices, yes, if you see, there is a plateau already in the launches, if you see the numbers. So, there will be very, very selective launches, and developers are very cognizant of the fact that where the demand is, which locations within cities the demand is, very, very active. So keeping in mind, I think launches will be in the range bound only around, as per our estimate, the growth, there will be a growth definitely, but not to the extent of what we would see, earlier 5-6 years back.
All right.
The launches will be around 5%, 6% growth. In
Got it.
fact, the first 9 months we have seen a slight marginal decline in launches already.
All right. Okay, thank you, Mr. Das, for joining in. With that, we'll slip into a short break. When we come back, we'll put focus on TTK Prestige and Jana Small Finance Bank. All stocks on our radar today. Stay tuned for that. Welcome back. You're still tuned in to Mid-Cap Radar. Well, TTK Prestige, that stock is surging trade after reporting Q2 numbers. Upasana is joining us with the analysis. Upasana.
Well, it's certainly a turnaround quarter for the company after reporting several quarters of weakness. Now, going to the revenue growth first, the company has reported a strong double-digit revenue growth of 11% after several quarters of tepid growth, and the revenue growth is likely aided by the company's cookware segment and also its increasing focus on premiumization. Now, if we look at the H1 FY26 revenue growth, that stands at 8%, well within the guided range of high teen single-digit growth given by the company earlier in Q4, and company had also told us that it is aiming for a double-digit growth within 2 years back in Q4 FY25. Now let's just look at the numbers. Revenue stood at 833 crore with an uptick of 11%. Gross margins have also expanded by 120 basis points at 42.4% versus 41.2%. EBITDA has seen a healthy uptick of 33%, and EBITDA margins have also seen an uptick of 190 basis points at 11.6%. PAT stood at 63 crore with an uptick of 21% on year-on-year basis. So all in all, it's a strong set of numbers for TTK Prestige this time around.
Well, thank you so much for joining us and taking us through the internals as far as TTK Prestige Q2 results were concerned. Well, moving forward, Jana Small Finance Bank actually faced a regulatory setback. Gaurav joins in with more details. Gaurav, what does this spell, the RBI diktat for Jana?
Well, yes, when we look at Jana Small Finance Bank, they had applied for the license of universal banking, but now RBI has returned the application, meaning that they have not given the application the rights for Jana Small Finance Bank to become universal bank. Now, when we look at the timeline, Jana Small Finance Bank actually applied for the license on 9th of June 2025. So, in just 4.5 months, RBI has returned the application. When we look at some of the instances that have happened right now, remember, AU Small Finance Bank, they recently received the universal banking license, and it took 11 months for RBI to give their verdict. When we look at Jana Small Finance Bank and the guidelines, there were a certain criteria that they had set by the RBI, like prescribed CRAR ratio that they had to maintain, gross NPAs below 3% and net NPAs below 1%. When we look at Jana Small Finance Bank, it seems that on the number basis, they were meeting the criteria. In fact, they fulfilled the criteria by the end of FY25, and right after that, they applied for universal banking license. But there were some hurdles. When we look at second quarter's results, we saw they already actually reduced the PAT guidance almost to 0 to 2% versus what they were guiding for 30% growth. They in fact also reduced the ROA guidance somewhere in the range of 1.1 to 1.5%. And at the same time, if we go back in time, we also saw Jana Small Finance Bank reporting net NPAs around 0.99% at times also during first and second quarter of FY25. And at that time, they made prudent provisions to keep it below 1%. So definitely a setback for Jana Small Finance Bank, and as a result, when we look at stock performance, it is down more than 2% today.
Well, absolutely right. Was down a lot more during opening, but since then has recovered marginally. But again, setback coming in as far as that particular name was concerned. On the other hand, IndusInd Bank, that particular stock, has surged the day's highest point. IndusInd Bank almost 4% higher. And the other stock that's doing quite well is IndusStar. That particular company came out with its results, some positive news flow regarding Vodafone Idea as well, aiding the momentum over there. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.